Welcome to today's webinar, Sovereign Wealth in a Data-First World, Powering the Tech-Driven Future. This is an event by Fencore in collaboration with the Institute of Sovereign Investors. My name is Thomas Akram. I'm the Managing Director EMEA for Fencore. Our agenda: I will give a brief introduction to the roundtable, the format and the content, an introduction to the guest speakers, followed by a discussion amongst the guest speakers. We will then move on to the questions that we will receive from the audience. You are encouraged to submit questions as part of the presentations. Some of you have already sent emails, LinkedIn messages, text messages, so we will collate all of those and address as many of them as we have time to do. The roundtable itself has a duration of 1 hour. We will also be running a couple of polls in parallel, and there will be a short presentation of Fencore as well as the Institute of Sovereign Investors. Across the two sessions we have today, we have more than 100 attendees, so thank you very much for taking the time to engage and be part of the debate. So today we will focus on target operating models, past, present, and future of sovereign wealth funds. How they are organized in terms of investments, operations, governance, processes, data systems, and structures, including partnerships and outsourcing. We have sovereign wealth funds with us who have been in business for more than half a century, and participants and consultants who are working with funds that are yet to launch. And of course, the sovereign wealth fund ecosystem extends to asset managers managing assets on their behalf, asset owners who are co-investing with sovereign wealth funds, and of course, their technology and consulting partners who are crucial for facilitating and managing change and transformation. We look forward to a conversation on market trends, opportunities, and challenges, and how technology is driving this. The webinar will be recorded, and we will be distributing the slides and make a white paper based on the conversations and the reflections post the event. We will also share white papers previously produced on a variety of different subjects by Alpha FMC, Fencore, and finally the Institute of Sovereign Investors. Quickly on Fencore, an introduction to us. Some of you know us very well, others do not at all, and hopefully that conversation will be good. So I'll keep this brief. We are a modern cloud-native, AI-enabled data management solution for asset managers and owners of all shapes and sizes across all asset classes, public and private markets, and structured and unstructured data. Data is an essential component of the modern target operating model, and we believe that a data-centric operating model is a good foundation in terms of future transition, continuous and constant development and change, because it gives you the ability to swap out components of your target operating model when that specific area, function, or system is no longer fit for purpose. This is our third webinar this year, having previously covered AI specifically, as well as the buy versus build versus outsource webinar that we did in January. All of these are through the lens of target operating model, change, transformation, and how new technology is impacting, enabling transformation and change. Then onwards to the guest speaker introductions. Personally, I've been in financial technology for 3 decades. This is my 30th year. I spent more than 20 years as head of services, UK, Ireland, and the Middle East for SimCorp, followed by 6 years in consulting before returning to software with Fencore in 2023. Christian, I will let you introduce yourself.
Good morning, good afternoon, everybody around the world. I'm Christian Fluhorn. I have 3 decades of CIO experience I set up the International Forum of Sovereign Wealth Fund with its membership, and I'm currently running the Institute of Sovereign Investors, where we basically advance the philosophy and governance practice of sovereign investors around the world. We have 90 members and cover $91 trillion in assets.
Nick?
Thanks, Thomas. Hello, everybody. I'm Nick Decker. I'm based in Hong Kong. I'm a senior partner at Alpha FMC, a leading consultancy to asset owners, asset managers, wealth managers, and private banks, specializing in strategy, operating model, and technology transformation. Got 20 years in financial services, and I currently lead Northeast Asia, co-lead APAC, and also our technology consulting business internationally. Great to be here.
And finally, Daniel.
Hello, everyone. My name is Daniel Reime. I used to be a senior advisor with the Norwegian Sovereign Wealth Fund, Norges Bank Investment Management. That is the world's largest sovereign wealth fund, AUM $2 trillion, invested in 9,000 companies globally. Subsequent to that, I have consulted for a number of funds globally, both in the Middle East, Southeast Asia, and Africa. Thank you very much.
Right. Thank you very much, all of you, for the introductions. We will move on to the guest speaker discussions, and we have prepared 3 questions and looking forward to various perspectives on this. So starting with the first one, and I'll go back to you, Christian, to start this discussion. What does sovereign leadership look like in a world where technology is no longer a support function, but a strategic differentiator for national wealth?
Basically, it's about sovereigns leading from the top. AI is basically a core strategic asset that is now part of and should be part of the governance structure of most organizations, if not all. That means that you need to take charge of data security. You need to have a clear idea of how you build resilience within your organization. In practice, that means that you may have different AI system providers and partnerships that you make sure you're resilient against any of these not working as you would normally expect. Next, you go and build what we call operational alpha throughout your organization, and you do that by taking each and every processes of yours and see how you can augment yourself and your processes to be as much driven by AI as possible. You might want to run this in tandem as a starting point with your existing processes until the day that you can convince yourself that now you are AI first organization. We also talk about basically having a responsible AI framework. AI is a solution to a means, but it's still your decision. It's still your problem. It's still your quality control if and when AI results in decisions which are not turning out the way that you hope them to be. Therefore, you set standards, you work on governance, and you promote that by studying your peers, interacting with standard setters, and really lead this as a new revolution, which it is, that is coming towards management. I'll leave it at that.
What's your view on this?
You ask me?
Oh, sorry, I was moving on to Nick, actually. What's your view on
Great.
this?
Yeah, absolutely. So we do a lot of work with sovereign wealth funds in AI, and so certainly a lot of what Christian said resonates. But I would start with a mandate, right? Because sovereigns are not all trying to do the same thing. So some are primarily return-seeking investors, some are stabilization reserve funds, others have a broader strategic or developmental role. So it can mean different things. So for a return-seeking fund, tech is about investment edge, similar to another institutional manager, helping them see the total portfolio more clearly, understanding risk more dynamically, overseeing managers more effectively, and making better allocation decisions. So leadership there is about becoming a better long-term investor. If it's a reserve fund, technology is about resilience that Christian touched on, right? And can the fund model liquidity under stress? Can it support government decision making during market disruption, etc. It's not glamorous, but it is very important. And then for a sort of a more strategic or developmental fund, tech can be part of the mandate itself, and the fund may be helping build national capability in digital infrastructure or AI data centers, and of course now energy systems to power those data centers, and domestic capital markets. So it's not, tech is then not only an internal capability, it's an external investment theme. And there is a trade-off there, of course, of a fund's asked to support strategic sectors or domestic capability. Those investments, when you look at it on a pure risk-adjusted return basis, those investments may not necessarily be what you choose. So you have to look at the strategic benefits with I suppose the risk-adjusted return, and it comes to a decision. So really, what does it mean, the leadership in this context? It's about using tech to deliver the mandate better, whether that is return or resilience or national capability.
Daniel.
To me, sovereignty means fundamentally that you're in the driving seat. But if I'm supposed to break that down into three components, I think analytical sovereignty, which is around owning the models and pipeline, not just consuming vendor data. It could be operational sovereignty, which is the second point, executing at scale. For example, NBIM's AI trading program cut nearly $500 million in costs between 2020 and 2025. And lastly, strategic sovereignty, that's staying free of legacy lock-ins so you can adopt as landscape shifts. But I think also there's a national dimension. The technology choices as a sovereign fund makes carry implicit policy significance. And let me give you an example of what our CEO, Nicolai Tangen, said directly to the parliament in May 2026. There's a concentration risk around a few companies that we've never seen before in the fund's history, and it may continue to increase. So it really shows that these are the kind of three top things that I think about when it comes to sovereignty. Thanks.
Very interesting. Follow-up question, and please feel free to jump in who would like to do this one. I mean, sovereign wealth funds comes in all shapes and sizes, both when it comes to the assets under management, the maturity, and the focus on this one. Can you see any global trends in terms of sovereign wealth funds? What would be the most important thing if you look across the segment?
Shall I give it a go quickly? First of all, the sovereign wealth funds are in an interesting position because they're both major investors, and we see them investing across the globe in many different types of AI, both the infrastructure, the Anthropics of the world, and the beneficiary countries and companies. So they actually look at AI from the investment lens, and see which countries can achieve strategic advantage, which companies are basically producing results which lead to costing and smarter operation and smarter business strategies, and what are then the potential winners, if you will, from this new evolution of AI. So they have the investments and they are massive. We do take stock of them at the Institute as well. Next, you can basically have the global discussion where they study a lot what their peers are doing, because nobody has the holy grail here and know exactly how to do things. Obviously, Norway has led by example. Singapore leads by example. There are many good countries like New Zealand, Australia that also leads by example. So there's a lot of focus on peer exchange of knowledge, like what we're doing today. And management are quite interested. I think this is by far the biggest management topic at most board meetings these days. So they're trying to study how are other people operating, how can they use the investments they do, how can they basically beef up their own organizations. And as we'll touch on, many of them give themselves a quest and say, if I were to start a sovereign wealth fund today and I would make it AI native, how would I go about it? That's like building a new organization from scratch that becomes something that complements the existing one you have. And that leads to the advantage of new sovereign wealth funds. It's a great time to start a new sovereign wealth fund because you can become AI native from scratch, and then you can build the whole organization with a new technology backbone.
Thank you, Christian.
So
We'll
I'll stop
actually
there.
get back and elaborate on that one on the third
Yeah.
question in terms of past, present, and future target operating, which of course makes this very interesting, as you have sovereign wealth fund dating back 50 years, and then you have the new ones now just about to start up, both in emerging and established market who haven't had a sovereign wealth fund in the past. But let's move on to question number 2. How should sovereign investors redefine their operating model to stay influential in the global economy shaped by data concentration, AI acceleration, and geopolitical fragmentation? We've already touched on this, but we can try out different kind of angles. So, Nick, maybe you want to start with this one.
Yeah, absolutely. And this data point is, to your previous question around what do we see globally, the investment in data strategy and then new enterprise data tooling, and you'll have seen this yourself in the Fencore team, right? I've never seen so much in the past 2 years, and even in the past 6 months, especially in Asia. So that's something that binding a lot of firms together. But so let's think about 3 practical challenges. First, sovereign investors need to get greater control over their own data. So data concentration means that a lot of economically valuable data sits with external managers and custodians and vendors and platforms and various providers, right? So a fund can be rich in capital but poor in information, and that's a real issue if you want to understand total portfolio risk and use AI effectively and respond to market events quickly. The second is AI is raising the stakes, I suppose, right? If you want to put it that way, AI can help funds screen more opportunities, monitor more risks, interrogate more documents, make information more accessible, but it's only useful if the underlying data is trusted, if it's governed, and importantly, if it's connected to the investment process. So otherwise, it frankly just exposes bad data faster. And then third, there's that geopolitical fragmentation, right? It means funds need to understand exposure across more dimensions: country, currency, supply chain, counterparty, tech stack, ops, sanctions, data residency, etc., right? So for sovereigns, the identity of the capital matters, and this cannot just be a risk note at the back of an already very long investment paper. So what we're seeing a lot of is this total portfolio operating model, not always the total portfolio approach that we've seen popular in sort of some of the Aussie and New Zealand funds, but certainly total portfolio view and the op model that goes with it, moving away from asset class silos. So that's a key trend we'd see. So I think those are some of the key priorities.
Thank you. Daniel?
Sure. When I think about redefining the operating model, I think about a few things. So the first one is data concentration. And let me put this into an NBIM context again, the Norwegian context. So NBIM earned roughly $150 billion from 7 large US companies over the last 5 years only. That is a huge amount of money. But owning equity doesn't give you access to the data. You're fundamentally just a shareholder. You're not a partner. And what should be the response? It should be to build advantages where your position gives you access that they don't have. You want to have ownership of your data. You want to have direct company engagement. You want to have private market intelligence. That is around data concentration, around AI acceleration. So when ChatGPT launched a few years ago, the NBIM CEO was extremely aggressive in getting it deployed. In fact, he was making early calls to Silicon Valley to get early access before general release. And what was the result? Well, it was deployed almost the same day as it was released with a clear plan. And only the first year, he calculated that 200,000 staff hours was saved through using AI. Also using it aggressively in ESG screening of every new equity holding on the day, and using Anthropic Claude. That doesn't happen by accident. It requires infrastructure, governance, and culture built on this advantage. The last one is geopolitical fragmentation. So decisions for you about where you run your cloud, which AI tools you use, etc., are not only technical, but they are geopolitical. The imperative follows: build a deep, broad design for interoperability. Silos will be structured or disadvantaged. Design for resilience. Your system must work when it's under disruption, not under normal circumstances. Thanks.
Thank you. Christian?
Well, I'll touch on the talent side here as well. I think we are introducing a new term called AQ, the adaptability quotient. Our staff needs to have IQ. That's why we hire them, because they're smart. They need to have EQ because they can interact with other people at work. And then the new dimension is that in this environment, they need to have AQ because they need to apply AI in what they do and how they operate. If you have AQ, what do? You take whatever you do throughout your day, depending on whatever your role is. You can be front, middle, back office, whatever you do in the organization. You ask yourself a simple question: which of the things that I do can I do smarter with AI? And if I can then get myself out of my job by depleting some of my tasks by AI, instead of doing it manually, I go to my boss and tell him or her that, look, I now have less to do. I like to have more challenging. I want to do more interesting work. And if you have a good boss, I think he will tell you what an amazing individual you are. Here are some more value-added tasks. You can now participate in this, give it a go, have a revamp, focus on our investment committee, think about our structures, and you can basically make what Google called their 130 model at work. You can spend 30% of your time potentially doing things which broadens the adaptability of AI within the organization because you're spending less time on what you used to do. So if you can install that mindset in your people and build their AQ, you're doing something very smart when you're management. You're empowering your people to use a new technology and show who have the ability to do it well, and who are generally very not adaptable and a little bit like, I'm not going to call it deadwood, but basically showcasing that your ability to innovate with times has a problem. If you then have those kind of staff who doesn't show 100% adaptation, well, your job is to train them. Your job is to make them more adaptable when you're senior management, and your job is to equip everybody with similar skill and have them share knowledge and learn from each other. And by the way, this is what we do every day of our life at the Institute of Sound Investors.
Very good. Follow-up question from me, and then just jump in whoever would like to take this one on. This is a consideration for asset owners in general, but I think specifically for sovereign wealth funds that's been around for, well, as long as sovereign wealth funds have been existing, and that is the insourcing versus outsourcing of the actual investment process. Are you keeping it in-house? Are you keeping it outside with a reputable asset manager? And then how do you do that selection? How do you see technology, both from a delegation and an oversight perspective, impacting that decision alongside other interests of the sovereign wealth fund?
I think so. It sort of also relates to Christian's previous comment on talent, right, and sort of and helping upskill everybody. I think there is a challenge that sovereigns face, particularly in private markets. I would say public markets is easier to get that expertise, but private markets continues to be really hard, especially in smaller countries. That there just isn't it's hard enough in larger countries, right? It's smaller countries to have that depth. So I think using AI to free up sort of people's time, and so to help with manager summaries, etc., is really key. It's not going to replace the need to have really expert knowledge of private markets. So I would say that, what would I say the impact of technology is? I would see firms. I think firms will outsource a lot of public markets investment management because it's increasingly more straightforward. and they will have a difficult decision because they'll question with AI, is it faster for them? Is it cheaper and easier for them to do it in-house? But they'll end up outsourcing. And then with private markets, they will, where they can get the expertise for certain asset classes in their market, they will insource it and use AI and various tools available, because it's so document heavy, private markets, right, to speed up and extract better quality data. But they will need to continue to outsource the management of certain asset classes where it's difficult to get that expertise. And then of course you've got, but there's to be honest, a lot of it really does vary between countries. So you've seen that trend in Australia to start to insource more and more, right, as the firms have grown and professionalizing. But yet in Taiwan, you're seeing with, if we're talking about more of an insurance asset owner here, but to now start externalizing, because they're earlier in the curve and they've got to that scale where they can externalize. So I actually think it varies a lot more depending on the country you're in and the maturity of the asset owner and the sovereign, the ecosystem in the industry.
Yeah, no, it's a good point. There was also an interesting article about if you move to private markets with public investment fund starting to prioritize local talent and local CEOs of companies where they have strategic investments. So I think all of this will change over time, and obviously there isn't just one factor at play here. Talent and technology work hand in hand, and as Christian say, the AQ is an interesting additional dimension and consideration to take on board. Just a reminder to keep on sending us questions. I can see that they are coming in, but also the polls. We'll see what we'll prioritize when we move a bit further down. But we're doing well on time, and thanks for all the questions and the reflections so far. So this is the one that we already touched on, but I think is very interesting, especially given where we are in terms of the maturity of the sovereign wealth segment worldwide, and also the correlations and cooperation between other asset owners and managers. If you could redesign your organization from scratch for the next 20 years, or redesign it today, which of course there's always some kind of legacy, whether that is technology or mindset, what role will technology play at the center of that vision? Daniel, do you want to go first on this one?
Sure, happy to. So one obvious answer that I'm sure all of us will touch upon is to design for AI native processes, not AI augmented processes. And I think that's not unique to any sovereign wealth fund, really unique to any business anywhere around the world. But let me touch upon something that may not be so obvious, which is that NBIM in Norway requires, and it's to a large extent scrutinized by the population and the media to a large extent and in detail. What we've seen is that digital and AI has really allowed for greater transparency, better audit processes and flows, and we're able to actually respond to any requests for information either from media or the public in a much faster and more detailed way. So AI has actually allowed NBIM to be more transparent and basically show that we're able to operate more efficiently. And I think, for the next 20 years will not be the fund that wins with the best algorithm, but the fund that best understands the relationship between the human judgment, the machine capability, and how that builds around an organization.
Very good. Christian?
Like I said, this is a heck of an opportunity. If you're a new fund and there are 15 to 20 countries and funds being established while we speak, you should start with AI. Basically, there's much you can do, both in your front, middle, and back office, which can be automated and done in a way that sophisticates your operation. But before you get there, you start with governance, you start with resilience discussion. This is the high-level board discussion, and I'll argue quickly why. Singapore has led by example. It's everybody's CEOs in Singapore are responsible for whatever AI does in their operation. That means that whatever is the outcome of what you did at the various institutions is still your responsibility. That's an important thing to note, because you can sophisticate with AI, you can make AI do a lot of reporting, etc. But if you end up taking the decisions based on bad advice or bad reporting, it's still your problem. You took that decision. You end up being responsible. So figure out a way by which you shift your focus in the organization from doing the work to verifying the work, right? Singapore has also signed up with Veritas, which I think was a smart move, where you can set standards and you can be sure that the quality of the output is tested, ideally by a third party. So you can be sure that this actually works. It is your responsibility. Then the scaling benefits becomes enormous, because I can now invest my own funds internally and with my internal team, and I can make operational alpha in those processes, and I can really reduce the cost of making decisions and speed up the way I make decisions if that's a target. But keep in mind also the external fund managers, we can now get much faster and quicker information on what is going on in our externally managed portfolios. I sat for 30 years and waiting for the monthly report at times on what was going on with the fund managers who managed our money. And now we can simply make requirements to them and say, I want this every day of my life. I want it in this format. And this data feed needs to go directly into my management and my CIO and my team. Think of the advantage you're now getting. If I know very quickly from my system infrastructure what is going on internally, I also know what is going on externally with my mandates and my funds. I can better manage my risk because I know my consolidated risk features more or less 24/7 in real time. I can also figure out if there's things not going the right direction. I think Norway can lend more experience in this area, because I think in Norway they now have a process by which the various managers are asked to make bigger bets or lesser bets depending on how well they're actually doing in whatever style or exposure was supposed to be managed in this way. So this is just such an opportunity for investment management that we can much better manage the ship, if you will. We're managing a very big ship. We want to make sure it sails in the right direction. It does what we ask it to do, and everybody on board is aligned towards that objective. So a massive advantage with AI. You just need to go and start from the top and then embrace and implement.
Good. Nick, any additional comments from you?
Yeah, look, that all resonates, but I would say that anyone who's led a number of large transformation programs knows that if you put technology at the center, you're doomed to fail. So let's just start with that. That is the reality, right? You don't start with the technology and the glittery new piece of kit. You start with the problems and the outcomes that you want, right? So if I was starting from scratch, I wouldn't be putting technology at the center. I'd be putting the mandate and the investment process at the center, and then working on the sort of retrofitting principles based on the outcomes I wanted to get to. And maybe that's something around total portfolio view and building capability amplifiers into my system and interoperability and those sorts of things. And only then would I be thinking about what technology do we have available today, which at the moment is generative AI. That's what everyone's excited about, but that may well be something different in a few years. And I'd be designing my model on those bases, and those principles should be consistent, especially if we think of what differentiates sovereigns, right? They're super long term, right? So we shouldn't be thinking about in years or quarters, right? This is very long term. So starting with those principles and then using all of these fantastic examples we've heard today from Daniel and Christian, but then thinking about how do we use tech to achieve those. So that's my slight take on it. And reporting, absolutely, like you've got it's the same old reporting that's always been done for years. It's put in a drawer and never read. I mean, that's someone's got to change that, and I think we're starting to see that.
Absolutely. Good. So we got a lot of questions from the audience. What I will do in the interest of time is I'll skip the polls. We'll incorporate that in the white paper. There's one question though that I think stands out that we haven't really covered here, and that is differences between. We now see new sovereign wealth funds being launched both in financial headquarters of the world as well as in emerging markets. Any considerations about differences and how to approach that for the specific funds who are yet or just about to launch?
Very quickly, get your blueprint right before you start to do anything, right? Be clear on your mandate, be clear on what is it you're trying to achieve, be clear about your governance structure, take whatever you can from the Santiago principles, please, and see whether you can apply them in practice. Then you have what will become, hopefully and likely, a successful operation. Then try to find the right people who can actually put this in place, study your peers, learn from their mistakes and their wins, because you can fast track a lot by not repeating things which other people have already done. So make sure you understand, what am I doing? Why is this going to stand the test of time? And then we start to put in place. And obviously then you find the people who are knowledgeable, who can actually prove that they have done this elsewhere. And you delegate authority to have them lead. My personal experience is a lot of organizations, they love the idea of doing all the systems themselves, and then you end up with 30 different systems, and your big problem become how to get them to work together. Take the advantage, please, of trying to get yourself to one or two core systems where you can really see what is going on, where you can see all processes running on that framework, and you can give yourself some fantastic dashboarding and reporting that makes sense from each and every level of the organization. This is how good looks like.
That sounds.
I would echo that, and I think, get the governance right. We mentioned the Santiago principles. There's a huge amount of knowledge sharing between sovereign wealth funds. So it's so fundamental to get the governance right. Luckily, sovereign wealth funds that are starting today will have a technology backbone that is much more solid than any sovereign wealth fund starting 20, 30 years ago, like MBIM.
Yeah, no, that makes sense, Daniel. So what I said was that as at the end of the presentation, we will do a short introduction to Fencore as well as the institute. I will do a quick presentation of Fencore, and the institute has made a video that we will play. But before we move to those two final sessions, any final words from the guest speakers? Maybe starting with you, Daniel.
I think this has been a great session. I really appreciate everybody turning up. AI and tech has been fundamental to MBIM's since inception, but we've really seen an acceleration. And I think the points that I made around sovereignty are particularly important. The fact that MBIM is in the driving seat and making AI and technology a real differentiator has been so important for us.
Kristen?
Look, just an excellent panel. We would love to be in front of everybody and actually having the 101 discussion. So just to encourage everybody who wants to discuss and talk with us and reach out, we are very happy. And we have 90 people within the institute, and most of them are very, very senior sovereign wealth fund executives who've done this for 3 decades in various organizations around the world. So we are there at your fingertips. You just need to call us.
Absolutely, and as I mentioned, we will distribute the white paper. We'll make previous relevant white papers available as well, and our contact details will be in the presentation. And Nick, any closing remarks from you before we move on to the short final presentations?
Yeah, I can say as a tech exec, be clear on what problem you're trying to solve with tech. Technology changes quickly, but institutional purpose and good judgment, they endure.
Sounds good. Then just very quickly on Fencore, as I mentioned originally, we are a cloud-native, modern data management platform, AI-enabled for asset managers and owners of all shapes and sizes. across public and private markets, structured and non-structured data. So how do we fit into all this discussion? We think that data is an absolutely essential dimension of your target operating model. And our philosophy around this is to isolate the data operating model from your system operating model. If you're an old mathematician like me, if you want to solve any complex equation, you try to isolate but not neglect the various parameters of this one. And the advantage about having a data-centric operating model is that you have the ability, when part of your target operating model doesn't work, you have the ability to swap out components rather than to do a full top-down assessment, which could take years even to understand what you have to do to improve it. It is a slightly different approach to this. It is also technology that previously given technology that's used by sovereign wealth funds, large asset managers, asset owners, due to the price, have only been available for that segment. But we believe, given new technology, especially cloud technology, that technology is now available at a significantly lower price point. So it's worth considering that that part and that approach to it. So more data centricity. Data centricity means, of course, not only systems, it's the understanding, it's the literacy. So it relates very much to what Christian is referring to, the AQ. And without clean data, you won't be able to reap the benefits of AI, which has been core of the discussion we've had so far. If you're interested in us, just give us a shout. We do free trials if there's a specific area you want to dive into. So that's a guided trial, either that you do in collaboration with us or in collaboration with our implementation and consulting partners, who you are already now working with. I'll move on swiftly to Christian's video. So I'll stop sharing and start sharing again. So just bear with me for a few seconds.
And at the Institute, we took our own medicine. So this is how 2 publications look like in the 3 minutes video. And I think this is the way the future perhaps looks like for many of us.
Good. Here we go.
Welcome to this video on AI in Institutional Investment Management. I'm Christian Flivholm, CEO of the Institute of Sovereign Investors. The Institute of Sovereign Investors, or ISI, conducts AI research and is supported by a multidisciplinary AI global working group. Our research includes AI integration into investment frameworks and assessing external manager AI preparedness. You can scan the QR codes to access these papers. Our global working group comprises experts from diverse backgrounds in investment and AI. AI is a structural, not cyclical, change, disrupting sovereign investors who manage over $61 trillion. This disruption is accelerating and measurable. Costs of using AI have fallen 80% in the past 9 months, driving efficiency across asset classes, including sovereign wealth funds, central bank reserves, and public pension funds. The AI maturity in investment management ranges from level 0, no AI capability, to level 5, proprietary models and data. Readiness is non-negotiable. Managers without a credible AI strategy risk being excluded from the investable universe. We are unlocking operational alpha, shifting the 80/20ths rule to 20/80ths. This means automating the 80% of data gathering tasks so analysts can focus 80% of their time on strategic analysis and high-level judgment. The mechanism moves from passive dashboards to proactive, autonomous agentic AI. AI is being deployed across various internal use cases, including research and due diligence, portfolio rebalancing, risk and compliance, and operations and settlement. AI handles high-volume tasks, freeing humans for higher-level judgment across the organization. AI is reshaping investment committee processes. The AI-augmented process enforces submission standards, reduces groupthink with pre-meeting votes, tracks member hit ratios for accountability, and ensures timely follow-up. Human judgment remains essential, but AI amplifies accountability and improves outcomes. AI disruption risk differs significantly by asset class. Public equity and liquid fixed income face very high to high risks in the short term. Structured credit and private equity have moderate risk, but the risk is real, though not uniform. Our due diligence framework has 6 pillars for evaluating external manager AI readiness. These include strategy and governance, technology infrastructure, and proprietary advantage. Investment process integration and technology infrastructure carry the highest weights in scoring. AI readiness is no longer optional. Internally, asset owners must map maturity, pilot AI roles, and measure operational alpha. For external fund management, incorporate AI due diligence, commission technical assessments, and set minimum preparedness thresholds. The Institute of Sovereign Investors is advancing resilience and excellence in sovereign wealth strategy and governance. Our backgrounds include over 50 top-level practitioners and 25 academics. It is important to watch out for AI red flags. Risks include using simple API wrappers without a tech moat, single points of failure without multi-model failover, and obsolescence risk due to rapid AI advancement. Another critical risk is output risk from unchecked hallucinations and automation. Additional red flags include siloed engineering, where AI talent is isolated, minimal adoption despite piloting, and MNPI leakage risk without strict internal governance. Be aware of compliance risk from shadow adoption and external threats from AI-driven fraud, like deepfakes.
Thanks for your patience.
Thank you very much.
But you just read 2 publications in 3 minutes. So
Very
skip
good.
that for today.
Yeah, we'll make this available just in case you missed some of Christian's details during those 3 minutes and 24 seconds. So we'll come to the end of our session. We do have another one with some of the same participants, but a few new ones as well in about 8 hours. So if you want a second helping, or if you know someone who would like to attend, please do register. But for now, we'd like to thank you very much for attending. As promised, we will be back with collateral, more information, and we hope to be able to continue the debate and conversation with you on a one-to-one basis. Thank you very much, and hopefully we'll speak soon.
Thank you.